Now we had the index as a whole dropping back yesterday, and many saying largely on the back of profit taking, where we've seen particularly rescued banks doing pretty well over the recent past.
Hi Alicia, thanks for having me. Yeah, the market has been, should I say, rather soft over the last couple of days, and I think the major reason why is because we've seen a major slowdown in interest in the rescued banks. Over the last 2 weeks, the rescued banks have appreciated consistently, and I think right now we saw a slowdown in momentum because, in my view, I would say there was a slowdown in news flow. I felt, in our view, that what would really make that bull run sustainable would be news flow around development on Amcon and also on the rescued banks. I think so far news has been, or we saw developments yesterday as well when Amcon approved purchase of all margin loans for the sector and also all the bad loans for the weak banks. And I think that would, in our view, trigger another round again of interest. And I think one other trigger we feel that would really, that the market really needs as well is more information around the margin loans as well. If we can get details of margin loans of all the weak banks, at least to a large extent, analysts will have a view of how much the banks would get back in terms of income and what the bank will be able to, how it would improve its shareholders' funds as well. And in our view, we feel that would would have a positive trend in the market. But I think apart from that, we feel the strong banks still offer good value. Yeah. In terms of valuations, book value, they're still trading at an average of 0.9 times their book value, and we feel PE also, even 2010 PE is still quite low. It's currently at 12 times, and we feel it's going to improve to 6 times by 2011 as well. And so we feel that investors shouldn't ignore the strong banks, that strong banks still have more value and still offer better value than the weaker banks at this point in time.
Looking at those weaker banks though, Muyiwa, I mean, of course, the central bank has been seeking investors to recapitalize those 9 bailed out banks, but uncertainty about how Amcon would value the non-performing loans was the big question. Now that we've seen some development on that front, what do you see this move doing for that process and for M&A activity specifically?
I think it will obviously trigger M&A activity around the weaker banks, because the concern, like you had mentioned, was the fact that there was no clarity in terms of valuations, and now that that has come out, I think what would really happen now will be pricing. Depending on the pricing, I think that would really determine what investors would, if investors would be interested in the banks. I know EcoBank, ETI was interested in picking up one of the weak banks, but right now the view is that they are not comfortable with the pricing, and so I think to a large extent it's pricing that would really determine M&A activity in the banking sector at the moment. But I think apart from that, I think one important point is the fact that the Amcon has decided to pick up all margin loans for the sector as a whole. Initially our view was that the Amcon would primarily focus on the weaker banks and deal with NPLs for the weaker banks, but considering the fact that Amcon now wants to deal with the margin loans for the whole sector, I think that would really improve capital adequacy ratio and also improve asset quality for the sector. I know EcoBank has about 50 billion naira. That's EcoBank Nigeria now has about 50 billion naira in margin loans, which the bank has fully provisions for. If EcoBank can sell that to Amcon, obviously that would increase income for this year from write-backs and also improve asset quality for the bank as a whole.
Well, let's hone in on a few players there. Nigeria's Oceanic Bank said yesterday that it expects its 2010 pre-tax profit to reach 60.78 billion naira. What did you make of that trading statement that's come through and what it spells for that group moving forward? Are you reading much into it or are you awaiting more detail?
I think it will be positive for the bank. Obviously, we would want to get more detail on how they intend to hit that point, and we feel obviously it might not necessarily be through creating more assets. We feel write-backs would be a major driver, but like you said, we would really want to get more clarity on how the bank intends to attain that target. And we feel that would obviously improve the shareholders' funds for the bank and also improve valuations as well, because the company will be able to retain most of the profits and boost the shareholders' funds, and that would also make it more attractive for investors and make it a better investment for current shareholders as well, because our view has always been M&A. The shareholders would obviously lose out from the M&A, because if they can't really, the only way they can retain their shareholdings right now is to inject more capital through rights issue, and if the current shareholders are not willing to do that, then they would actually be at a disadvantage, because they would get a lower ratio of what they have currently.